Hello everybody and welcome to the Cyclical Investors Club YouTube channel. Today I'm going to be analyzing Southwest Airlines stock. This one came in by request down in the comments section, and I saw that Alaskan Airlines was buying Hawaiian Airlines today, and it made me kind of think of airlines and this one came to mind, so I took a look at it, and I actually noticed that I've covered it in the past, which I'll look at here in a second, but I wasn't actively tracking it. I kind of ignored it during the kind of pandemic era here, and I looked at most of the other airlines, but for some reason I skipped over this one, so I hadn't been tracking it. So I'm glad somebody asked me about it. I think it looks pretty interesting right now, and I'm going to talk about that. As always, this is not investment advice. This is just how I analyze stocks. This is going to be a deep cyclical stock, which is sort of my specialty. If I sound a little bit hoarse, that's because I have a little bit of a sinus infection, so I might sound a little more hoarse than normal, so bear with me here. But let's see what we should start with here. Oh yeah, if you have a request, go ahead and put it down in the comments section. If it's a stock that's in the S&P 500, I post those for free on YouTube. I put them on the whiteboard right behind me here. And usually I look at it during the day, and if something looks really interesting, I kind of bump it to the top, and if nothing does, then I sort of go in the order that I get them. If it's not in the S&P 500, I do those over on Patreon, which is $5 a month. And then if you join there, you can get a big discount on my full investing service over on Seeking Alpha, the Cyclical Investors Club, and those links will be down in the description. Okay. First, I like to look at any past coverage I've had, because I have unusual investing styles and strategies that I created myself, so I don't rely on, while I borrow a lot from other great investors of the past, I haven't fully adopted one particular strategy that I can say, oh, I'm using Ben Graham's strategy or whatever. So I like to, when I can, just look how I've done in the past with my calls. So this was 2018 was when I first wrote about Southwest Airlines. It doesn't have this labeled as a sell article because they didn't have the ratings back then, or the labels. But it was a sell article, as you can probably tell from the title here. If we take a look at that, we can see there's some data here I want to show you. So it is down about 50% since then. And there's some data here I'm going to come back to in a little bit. But I also covered it with another sell article. The stock price eventually fell. Let's go to the fast graph so I can show everybody. The stock price eventually fell from those. So this, I would have been writing about it. I started writing all these how far could they fall articles right here, but I didn't get to this one till like early April, so it was like right in here. And then I wrote that hold article that you saw in my list right just after this. I think it was on the 4th of January. So the price had come down quite a bit, and it was looking like, okay, the price has fallen. How much farther would it have to fall before I bought it? That's kind of what this video is going to be like too. But the stock price has fallen a lot farther since then. And then right during the pandemic, a little before we got the announcement Warren Buffett was selling, right about here, I think this is the exact day that other sell article that I had came out. So we can see how we've done since then. Down about 41% since then. Now, the part that I think is interesting about this is Warren Buffett had all 4 major airlines. He sold them in March at some point, and I think it was announced at the beginning of April of 2020 that he was out at that point. So probably somewhere around here. We'll call it right here. And then once the Fed stepped in and we got all kinds of stimulus money, all these airline stocks shot up, and everybody was talking about how stupid Warren Buffett was, and because the stock prices had jumped 75% in like 2 months or whatever. Actually, that's not 2 months. That's more like 9 months or something, because it's into the next year. But the point is that I always made this whole time, because I thought people were just totally ridiculous. Yes, it's true the stock price went up, but if you look at the earnings of the airlines, they were basically losing money, and there was no real good reason for the stock prices to go up. And Warren sold because he knew that airlines were going to have a difficult time making money. He also did mention that they might not. They did get bailout money, and which is good, because it wasn't their fault that things got shut down, right? But he did note that if he was a 10% shareholder or whatever, maybe politicians might not have given the bailout money with the idea that they're bailing out like billionaires and stuff. So you can think of like Elizabeth Warren or somebody kind of going on a tirade about that. She might have anyway, even if it didn't. But if we look at like a United, it was even worse, right? I mean, these guys lost a ton of money, and I like United. That's usually who I fly with when I can. But they got hit much harder than Southwest, and I think that might be one of the reasons why I wasn't paying too much attention. We'll look at Delta too. I'm just going to kind of glance at them, see a much bigger hit to earnings these couple of years. They did come back stronger, and we'll look at American Airlines as well. So an American, very similar, right? Similar sort of thing. Much deeper damage, I think, than Southwest, which I didn't really notice until I re-examined this. So you can see that these were relatively small earnings hits when everything was like closed down, and then they immediately bounced back by 2022 and they had positive earnings. So also, Southwest doesn't have as much debt. They have a good credit rating. This all looks like net cash to me, but it does say they have long-term debt. So I'm not sure how all that is structured, but debt is less of a problem, so that's good. And actually, Southwest was the only major of these four airlines that I tracked, because they had a long history of always remaining profitable. So you could go back, like, I think it used to, until 2020, which probably doesn't even really count. They had like 45 years of profitability. Most of these other airlines had gone bankrupt within the past cycle. So like if you pull up, I'll just pull up United since I'm picking on them a little bit today. So it only goes back to 2007 because they were bankrupt. I wouldn't be surprised if American is the same. Even less time it goes back, right? So usually these aren't like great investments. These guys only go back to 2006. So, but Southwest had a good history, and that's what I like to see with cyclical stocks. Now, speaking of cyclical stocks, this is a cyclical business. Even though they didn't have negative earnings, they had negative earnings growth. And we'll go back to my article so we can look at that, because when you have a big drop off in earnings, that can make these PEs kind of irrelevant, right? So let's say, I mean, they were kind of like a 20 PE here, which wasn't too bad considering how fast they were growing. But as the price went down, earnings fell too. So even at the bottom, like down here, they were still at a 20 PE, but they lost like 45% of the stock price had fallen 45% just in that little time period. So the PEs aren't very predictive. And then at the bottom, well, in this case, they didn't have negative earnings, so it helps. But, a 15 PE isn't super attractive. You would think like you would normally get like average returns. But in their case, actually, it's probably worse here. Yeah, this is a better example. So 15 was before earnings bottom. So at the earnings bottom, it had a 60 PE, which you think, oh, well, that's paying a lot of money. But really, it's not. And you can see that when that new cycle took off, they returned 300%. So the main thing is the PE ratio doesn't tell you very much about the future, if earnings are in a down cycle or if they're at the peak of a cycle. Now, this isn't a very fair cycle to use here, but you can see that, even up here, when did I write about them? In 2018, actually. So that wasn't super cheap, but even midway through 2018, a 13 PE. And then we get down here, and the loss. Again, that's not great because this isn't a normal down cycle, but the PEs just aren't very predictive of the future stock price is the point I'm trying to make. So because of that, I used long-term historical stock price drawdowns. Then I control for several things too, but I'm just keeping it simple here. So this is my 2018 article, almost 6 years ago now. And I list out the historical drawdowns in this little graph so we can get an idea. Now, 2001 was a very unusual cycle. It somewhat corresponded with economics, but we had 9/11, and then what happened was the stock didn't recover before the great financial crisis. And so this long down cycle occurred. At the bottom of the financial crisis, it was down 78%. So that's pretty unusual. But if you look back to some of these other ones, you can see 60% decline, 60%. Obviously, they were younger back then and smaller. 85 was about 60%. So even though earnings weren't super deeply negative like a lot of these, they were still cyclical enough that you got this price cyclicality from the stock. And it is capable of having a big down cycle that we saw here. If we just didn't start this in 2001, we started in 2007, that's like a 65% drawdown. So that's something to keep in mind this time around. So if we got the whole 9/11 part out of it, we just took the peak in 2006 or 7, it fell about 65% off its highs. Right now, as I'm recording this, it's about 60% off its high. And earnings are recovering, so they're positive now. And I measured the high from back here, but it made a similar high, almost the same in 2021 on this kind of exuberance that we had. So the market's willing to pay this much. That's my thinking, if the conditions are right. So if we go forward 5 years, and we say, you can kind of see what analysts are expecting. Who knows if this is going to happen? We could have a recession. It could take longer. The stock price could still come down and everything. But if you buy one at 60% off its high and it recovers $67 a share from here, that's a 150% return. So even if it takes 5 years, you're still doing really well. And that's how I think about these. First, you want one that's high enough quality to recover. Second, you want to buy it at a low price. And third, you need to be willing to wait. You have to ignore fundamentals, basically. You need to be willing to wait a few years. And usually my rough max is 5 years for a stock like this. So the idea is you buy it here, you wait 5 years, maybe you get 150% return would be the expectation at some point in there. And then when you get that, you take profits because eventually there'll be a down cycle. And so that's my basic strategy. There's other things that I check and everything, but that's the basic way I look at it. Right now it's down 60%, and I would want it to be down 65 before I bought it, which is about 12% lower than here. I'm going to do the quick math. I have it in my spreadsheet, but I don't have it pulled up. So let's see. $23.44 would be my buy price. And if we have a recession, it could definitely go lower than that. That's actually right. It went a little bit lower than that just a couple months ago. So maybe it recovers and it never comes back down. I don't know. Might miss it. But if it does come down and make kind of a double bottom, or we have a recession, I'm kind of willing to step in and buy there and then just commit to holding for the next 5 years. You just ignore the news. If things get worse, if they lose money in 2024, you just ignore that. You assume that things will eventually come back. I take 1% weighted positions. So 1% of a portfolio, it can be very volatile, but if you get it right, you're going to have a very big winner usually on your hands. And once you buy these, you can kind of just forget about them because the fundamentals aren't going to, like the earnings reports and all that. Now, eventually you want them to be good, but you don't want to be selling and buying off of short-term fluctuations. You basically want to just buy it, commit to holding it until through any initial recession we might have, and then up into the next upcycle. So hopefully that helps everybody. I don't like any of the other U.S. airlines. It doesn't mean they won't follow like a similar pattern, but I like the ones that have a history I can look back at. Southwest is pretty profitable historically, and even though they have had their kind of snafu with scheduling and their antiquated things, probably they'll work on fixing those type of things. So, and even though they haven't, they're still making money. I expect it to be bumpy for the next couple of years, honestly, and then, but you never know when the takeoff's going to happen, and the stock price will probably anticipate any like real earnings or any. So the stock price will be well gone by the time everybody can tell that things are recovering. We can see they're capable of making $4 a share. That's 3 times more than where they're at now. So we know the potential is there. It's just a matter of whether everything can get executed, and they're the only ones that can really control that. So it's just about placing a high probability bet and then waiting for it to play out. All right, thanks for that question. I'm glad I'm tracking this one now. I might be buying it in the future. If you have a request, drop it down in the comments section. Hit the subscribe button if you found this useful, and I'll see everybody later.